Hey everyone, so in this video we'll talk about why the data that I fetch right every single day, that is the best indicator to kind of gauge the market mood. Okay, so you have a lot of indicators that will tell you whether the market is overbought or oversold. But to be honest, let's take for example the RSI. So the RSI actually will be above 70 or 80 for most of the times in a bull market, right? So it's not such that great of an indicator when it comes to actually taking in the mood of the market, whereas something more reliable, that is whether the big guys are actually buying at this level or they are selling out at this level, will kind of give you an idea as to what is actually happening, right? Because at the end of the day, if the big guys have to get out, then they would have to sell it to the retailers, right? And what happens, you get a lot of these data like the FII is selling or FII is buying right now, so that you can get it easily on even something like a stock edge. So if you go to the FII cash market, but this is mostly for the large caps. So all this data that you see, the FIs have bought 9,000 crores, 3,000 crores, 4,000 crores, all this is for the large caps. But let's say how many of us retailers actually play only the large cap stocks? Probably 10% or even less than that, 5%. And majority of the retailers are very active in the small and mid cap space. And to be honest, most of these FIs, they don't participate in the small and mid caps, like most of them, unless they are like very high quality. They would not really want to bet on these, because let's say they want to buy 1000 crores worth of some stock. The stock itself, the company itself, is like 2-3,000 crores, so the FIs might end up owning 30% of the company. So usually what happens in the small and let's say the smaller mid cap space, the FIs are not that active. So then it comes to a point wherein the DIs are very active and there is no real gauge as to understand whether the DIs are buying or selling in the broader market. So that is when I kind of formulated this whole accumulation thing, which kind of tells us and gives us an idea as to whether the overall accumulation in the broader market. So what I've done is kind of taken the good quality names, because that is where the big guys kind of play, correct? So big guys are not, let's say when I talk about big guys, let's say it is even the HNIs, it is going to be your mutual funds, your PMS guys. So these guys are not going to risk their or their clients money in some kachara stock, correct? So what we can do is, by kind of analyzing these very good companies and looking at their price action, we would be able to judge, okay, accumulation is happening or distribution is happening in them. So this kind of gives me an idea as to, okay, whether the overall accumulation in the broader market is kind of improving or is it declining, and that we have to get out of the market. So if you correlate this with the small cap index. So what I've done, so the small cap index, let's take from September 1st. So September 1st, so it was actually improving at that time. So 50 is considered to be like a low figure, and something around 100 or higher than 100 is like very good. So when it started improving, going above that 100, that is when you see a rally kind of happen in that market. But then it was more of a consolidation. That is when even the overall accumulation kind of fell, and it was in this range for quite some time, right? So in such periods, what you'll do, you'll be very stock specific. You'll know that, okay, now there is no broader market rally, but stock specific action is going on. Let's say in these 50-60 names, something that has been continuously accumulated, those will perform really well. And when the accumulation again starts going above that mark, right, 100 odd mark, that is when you would know that, okay, now there is going to be a sustained rally that is coming in. For example, here it kind of so let's take in October end, right, the 24th or thereabout, right? Yeah, so that is when you can see that it had on 27th, it had again touched that 100 or mark. So even I had tweeted about it saying that the accumulation is very strong and the small cap index, there is panic all around, but the big guys have gone ahead and bought it, right? So panics like these, when the index is falling, your portfolio is bleeding, a lot of what a lot of retail investors do is they'll kind of panic and sell out, right? But if you know how the data is at that point, you'll be more calmer, you'll not panic and exit the stock, because that is what the big guys want you to do. They want you to panic and get out of the market, right? So when this dip actually happened, the accumulation was actually pretty good around that 100 mark. So you would know that the accumulation is very good and it is going to go up from here. So there is also this accumulation distribution kind of indicator on the this thing, but that is completely different. That is not what I do. This is mostly based on the data of each individual script. Okay, and then it kind of move up and it cross this. Right now, if you look at it, like many people are saying that it is overbought, there is FOMO in the market, most of the market indicators are pointing at greed in the market and all of that, right? But if you look at the data is pretty good. Now if the big guys are going ahead and buying it at these levels, right, then they know that something better is coming. Maybe the results for Q3 are going to be very strong. That is why they are buying it much before that. So you remain invested in the market instead of looking at so many people saying all that and then kind of booking out of the market. So this particular indicator which I have made based on the data is purely based on whether the big guys are buying more or they're getting out of the market, right? So if they're getting out, naturally the accumulation is going to dip quite significantly and they are going to be exiting the market. But that is not the case even as of now, where a lot of people are talking about FOMO, because in a bull market, when your RSI is overheated, your market mood indicator is showing greed and all of that, but still if the big guys are pouring in more money, because they are not fools to kind of put more money at a level which they don't feel is like a great level to buy more of those stocks, right? So as long as the data remains good and they keep putting in more money, the index is going to rally. If the data kind of cools off, right, then, because in between I'd even tweeted that the data is cooling off. Why? Because this thing had gone below 100 around that 80 odd mark. That is when these sideways movement was happening. But now after the Fed signaling that rate cuts up to 75 basis points might happen in 2024, the market mood has completely changed and people, looks like even the big guys who were sitting on some cash are deploying it, because they don't know if they are going to get a crash in the future. So they are deploying it right now, buying more of these stocks. So if anyone wants to kind of learn this, and because most of the feedback that I get from my students is, in turbulent times when there is panic, they are more calmer. They don't kind of book out just because the market is falling, or let's say there is some kind of a FOMO and the data is not supporting, they don't end up buying such stocks. So in case if you want to learn it, you can always ping me on my Twitter handle and I'll give you the details. Okay, hope this helps. Thank you.